You believe there's a quote, seismic shift happening on Wall Street with traditional institutions that have historically ignored blockchain investments now seriously looking at the sector. So you're the founder and general partner of New Form Capital, a blockchain focused VC firm. So what have you been noticing when it comes to Wall Street's appetite for blockchain technology, and what do you attribute the shift in sentiment to? What are some of the catalysts? Do they include the approval of spot Bitcoin ETFs here in the US earlier this year?
Yeah, that's absolutely been the biggest catalyst so far this year in both the appreciation of crypto prices and the kind of re-engagement that we're seeing amongst large financial asset firms on Wall Street. Look, it's no secret that the blockchain space has had a rough go in 2022 with the market correction and the frauds that came to light during that correction. And mostly the media has been covering the space in a negative light, covering the frauds and the more speculative nature in the space. But BlackRock kind of spearheading this new ETF push and unveiling a number of other tokenized assets has really kind of recentered the conversation around a new generation of digital financial assets that are running on tokenized rails. So, when Larry Fink, who runs the world's largest asset manager, says at Davos that, their grand plan is to tokenize $10 trillion of their AUM on tokenized rails, people tend to listen. So I think with the price appreciation, with kind of leaving crypto winter and a lot of the negative press behind us, you're starting to see sophisticated investors revisit the space and really kind of test blockchain technology for its merits as it pertains to financial markets.
So, what are you noticing are some of the use cases and opportunities in the blockchain space for traditional institutions? What have they been most interested in recently?
So we just touched on Larry Fink, talking about how he's planning on tokenizing $10 trillion of their financial assets. Some viewers might be asking, what does tokenization mean? That's really just kind of the process of taking a more traditional financial asset and coming up with a digital representation of that asset that trades on chain and enables a lot of the benefits of having an on-chain assets. Benefits that include 24/7 peer-to-peer transfers, built-in KYC and regulatory compliance, programmatic payments and dividends that you can build into these different blockchain-based securities. That's really kind of the interesting part to us, and we're investing in companies that are helping with that tokenization process. You also saw, another super large financial manager, Franklin Templeton, come out last week and mention that they're actually enabling peer-to-peer transfers for a tokenized money market fund they launched in 2021 on a public blockchain. And the hope is that, longer term, assets like that can be interoperable with the broader digital asset ecosystem. So another big kind of step in the right direction from large financial institutions. We also, just last week, saw an announcement from Stripe that they're enabling crypto payments in their product again. This is actually the second time that they've reintroduced it. The first go round, the tech was not quick enough. It wasn't cheap enough, but they're now finding that after 2 years, a lot of the scalability problems have been solved, and it's now cheaper and more pragmatic to enable USDC stablecoin payments in their product. So these are all, massive existing fintech firms and financial asset managers that are kind of announcing big products in the space, all kind of in this larger secular trend of blockchain coming into kind of the Wall Street lexicon.
Now, expanding on that, the Stripe announcement came 6 years after the payments firm dropped support for Bitcoin, citing the token's notoriety for volatile price swings and a lack of efficiency in making everyday transactions. Also in March, you noted this, BlackRock, the world's largest asset manager, jumped into the asset tokenization race, creating that new fund on the Ethereum network. So what do you make of these developments from traditional financial institution, and what's your outlook for the future of blockchain and finance?
Yeah, so I'll address, you brought up Stripe, so I'll address that first. Stripe, you mentioned that 6 years ago that they had kind of started, they tested the waters with Bitcoin payments, actually. They found that there wasn't a lot of demand for it, citing the volatility that's inherent in Bitcoin. It's also just a question that it was a little bit too early. Digital asset penetration was still in the single digits, whereas they're reaching higher now. The biggest thing is that they're now using USDC, or a stable coin that's pegged to the US dollar. So one, they're taking kind of the volatility out of the equation that's inherent with Bitcoin. But two, the tech has just gotten more scalable and cheaper to transact. So it makes it more pragmatic for the mainstream today. I will say that firms like BlackRock entering the fray is also massive, as it de-risks the space for other asset managers who look to the largest asset managers to see what they're doing. And again, I think we're going to see with this ETF launch that later this year, we'll see different advisors start to advise kind of a 1 to 5% digital asset allocation to their clients' portfolios, which I think is about right given the volatility inherent with the space. And this is all kind of part of a larger shift of crypto and digital assets moving from more of a kind of fringe asset class to entering kind of the mainstream financial portfolio, which is obviously big.
So the price of Bitcoin has been dropping this week, but in March, the cryptocurrency hit a new all-time high above $73,000. How has that played into VC interest in blockchain technology? In February, PitchBook released its fourth quarter update, revealing that the level of investment for crypto-related companies in the quarter climbed for the first time in nearly 2 years amid Bitcoin's stellar run. What do you think about the uptick in crypto VC funding, and what do you think caused that increase?
Yeah, so I've been investing in this space since 2016. There's a lot of inherent cyclicality that comes with investing in digital asset markets. That plays out both in public markets and private markets on the VC side. We work with a lot of our founders to create a plan to become capital efficient, to be able to survive both market booms and busts. I think that we've come a long way in terms of the recovery of the space from the lows in November of 22 post FTX, where Bitcoin was trading around 16 grand. Now we're seeing it in the 50s, even after the recent consolidation. So it's definitely a sign that we're moving kind of out of crypto winter into kind of the next phase of the expansion. This isn't our first rodeo, right? We've dealt with these boom and bust cycles before. We try and pay attention to longer, 10-year trends versus having to worry about kind of the daily fluctuations in the space. But you're right in that, that the price action tends to kind of lead private market valuations by about 6 months or so. So you're starting to see the reemergence of interest from more generalist VC funds that typically are fair weather investors. They tend to leave the space in crypto winters and tend to come back when the price action is going up and to the right.
Now, I read an article from 2021, which noted that New Form Capital looks at 3 buckets to invest in: DeFi, infrastructure, and blockchain-based trading and securities. Does that still hold true now? What are you focused on right now?
Yeah, I mean, look, we're focused kind of at a macro level on the intersection of blockchain and capital markets, and really how the former can make the latter more efficient. And then we kind of further break that sector down into 3 subsectors, which you just named. There are a number of developments in the space that have kind of evolved since 2021, but on a surface level, that's really kind of how we view the world of blockchain-based finance. That last bucket that you mentioned, the real world asset bucket, is the one that I was referring to earlier that Larry Fink spoke at length at Davos about, and the one that we're really excited for during this cycle. Typically, what we've seen is that in our conversations with larger financial institutions, there are 2 main barriers for their entry into the blockchain-based finance space. The first is education. You'd be surprised by how many really sophisticated investors are uninformed about the space, and it's really not their fault. Most of the coverage, at least in the mainstream financial press, has been negative, either centering on frauds like FTX or more of the kind of spectacular, speculative activity, which makes for good clickbait, but isn't really reporting on what's going on in the space. So we have a lot of conversations with really sophisticated investors, and once they walk away from conversations with us, at the very least, they kind of admit that this technology represents a really interesting new vector for development in the fintech space. The other big challenge to the space is around the regulatory situation in the US. So unfortunately, the US has been a laggard here. We have yet to come out with a clear kind of regulatory framework that allows builders in the space to make good faith attempts to adhere to laws. But there's reason to be hopeful. There's a stablecoin bill that's working its way through Congress now. I think we'll have further kind of common sense regulation that will come about in the next couple of years. So these are both problems that are solvable. And again, on the kind of longer scale time frame that we're looking at as an early stage investor, these are 2 problems that will be solved within that time frame.
So generally speaking, what are some of the VC trends in blockchain right now? The combination of blockchain and AI has been getting a lot of hype recently. According to Van Eck, crypto AI revenues are projected to reach $10.2 billion by 2030. Are you seeing a lot of interest in startups trying to combine AI and blockchain technology? And do you think that projection from Van Eck is realistic?
Yeah, well, look, you mentioned two of the most hyped up terms in venture today, which is crypto and AI. We've seen kind of two buckets. The first bucket is kind of opportunists who want to slap crypto and AI on their fundraising deck, and means that they can raise $10 million. But there is real innovation going on in the space. We think largely a lot of it is kind of hype. But we're excited about kind of AI's potential within the asset management space, particularly as it comes to crypto. Given that crypto is internet native, you can kind of program really interesting features into the smart contracts and underlying securities. And it's our view that AI will have a role in the trading and transfer of those digital assets going forward. So that's definitely a theme we've been looking at. But we do think that there is kind of a little bit of hype in the space that has led to a caution when approaching some investments.
So do you think that projection is realistic? Do you think crypto AI revenues are projected to reach $10.2 billion by 2030?
Yeah, I mean, look, most of these projections end up being wrong to the downside or the upside, so I won't comment on dollar amounts, but I do agree that it's a really interesting theme going forward.
So in a nutshell, what's your approach to investing in blockchain startups? Could you provide some examples of successful investments by New Form Capital that showcase the potential of blockchain in fintech?
Yeah, so I mentioned earlier that we're pretty focused on kind of this narrow niche of blockchain and capital markets. I can mention a couple of our investments just kind of for illustrative purposes. So the first is Figure Markets, which you guys have probably covered, given that the founder is Mike Cagney, who previously founded SoFi. That's a really interesting play where Mike is essentially using blockchain technology to cut down on the amount of costs associated with securitizations. Essentially, during a securitization process, you have a ton of middlemen who are coming in and rent seeking, which makes the securitization process pretty lengthy and costly. With blockchain technology, he's been able to basically cut down those costs and time to securitization by about 60%. He's done something like 30 billion of volume with top tier investors like Apollo. So given the fact that he's built multi-billion-dollar technology companies in the past, we're very excited about that one. Another one that I would mention is a company called Caliza out of Sao Paulo. It was founded by a gentleman who's a former Visa exec. He's essentially building banking rails that allow Brazilian SMBs to access US banking rails using stablecoin technology. So the current paradigm is that in Brazil, it's actually pretty costly to access US banking rails. So that's mostly been reserved for large multinational Brazilian corporations. But this API that Caliza provides allows SMBs to get in on the action as well. So that's actually our most recent deal that we did last month. We're very excited about that one as well.